mean, the word volatility is used quite a bit in quite a lot of different contexts. So as it relates to the stock market, I think a really good starting point here would just be to define our terms. What is volatility and how has it shown up in past history?
Yeah. Yeah, it's a great just to have a good baseline for that. Yeah, so volatility, right? In an ideal world, our investments would look a lot like this magenta line where it goes steady and we know exactly what to expect from an investment. Technically, the volatility is the statistical measure of a return of a security or index, and that sounds very jargony. And really has to do with how much, movement we see from that average return line. So again, that steady eddy line that we see there in the magenta is ideal, but more likely what we see is that teal line. And it makes it a lot more harder to really judge where we're at with an investment. If is it a good investment? The more volatility that it has can have that sense to it. And I think, Jeremy, a lot of times we tie volatility to stocks, but really any investment that we have, can have volatility to it, right? This applies to bonds, this applies to, crypto, it involves to real estate, all across the board. It's important to know. And they might have different values to them, but, volatility does apply to everything.
And while not always true, I think it's fair to say, tell me if you would agree that there is a rough relationship between expected returns and volatility, right? Usually if you have things that are higher expected return investments, you're going to have a little bit
Yeah.
more of a ride up and down as it goes along.
That would be the expectation, right? We're taking more risk by having that higher potential change in value. So as an investor, I would expect to get more returns. Doesn't always happen that way, but that is what the expectation, and there's usually a correlation between the two. Now, as again, we look at this over time, right? And we look at an index or investments, we can have volatility on an every year basis. And what this chart is really looking at is, the returns of the stock market on the total returns is the blue line, and then the kind of opaque part of the chart is the lowest part or the amount of the lowest drawdown for the year, right? And there are some years where we had positive returns at the end of the year, but we were down 20% at some point, right? And there's a lot of times that there's a lot of uncertainty and challenges that are going on, both in the economy, in the country, that, might make us worried in any one of those years, right? There's definitely years that stand out as we look across here as well, right? We can see, 2020, we can see 2007, we can see 1987 in here, but it also applies to other years as well that aren't maybe those staples in our minds that we think of. It's normal to have drawdowns and corrections. It's actually even good and healthy for the overall stock, our overall market, investment market, to have some pullbacks and downturns in order to make sure that things are actually appropriately, priced in the market.